So yesterday was Fed Day, and it turns out the Federal Reserve has kept interest rates at its target range of 4.25 to 4.5%. No surprises there. What everyone was curious about were Powell's comments in face of a new administration coming in and, basically upending everything in terms of trade policy. Now, in my opinion, this was a fairly dovish Fed despite the lack of an interest rate change in this meeting. Powell has basically come out and said that tariffs make things challenging, that they're continuing to be data dependent, and that a good part of the central bank's higher inflation expectations in the future will come from tariffs if they are indeed implemented over the long haul. The other really interesting thing that Powell said is that weaker growth and higher inflation kind of balance each other out. That I don't know about that statement, but we'll have to wait and see. In any case, the market's reaction to all of this was actually very, very positive. The market went ripping higher. And I think the reason for that has to do with the market now seeing an avenue to interest rates coming down if growth indeed moderates. There's a lot of wild cards here, though, folks. The biggest wild card is whether or not, the inflationary impact from the tariffs is so high that the central bank can't lower rates anyway. So I think that Fed watchers and traders had a bit of a knee-jerk reaction here. And yes, markets could launch higher. We've had a significant sell-off, but the risk is still, in my opinion, skewed very much to the downside, at least for the short term. Intermediate term, long term, those kinds of forecasts become a lot murkier. And that's why I think it's so important to actually turn to the technicals, take a look at price charts, and come up with objective parameters where we can start saying, all right, if the market does this, we can start getting a little bit more bullish, or we can start getting a little bit more bearish. So what we're going to do now is turn to TradingView and take a look at a price chart of the S&P 500 cash market so that we can look at some clear and easy to identify parameters. All right, so here we've got TradingView, and we're looking at an extremely important inflection point in the S&P 500. You guys see this little red line here on my chart? That is the 200-day exponential moving average. We can see that the market is brushing up against it right now. This is a very important trend filter of mine. In extremely simple terms, if we're above the 200-day moving average, I tend to be bullish. And if we're below that 200-day moving average, I tend to be bearish. So you can see as the market broke below the 200-day moving average, we did in fact get a bit of a continued sell-off. Now that we're coming up against the moving average, we're kind of at a make or break moment. If the market can break and hold above this moving average over the next few days and going, it's Thursday, March 20th, as I'm recording this, the day after Fed Day, the market can hold above this level on Friday and early into next week. That definitely sets the stage for a much larger potential bullish recovery. On the other hand, if we reject this moving average and stay below it, then we likely have lower prices in the market to go. So there you have it, folks. This is exactly how I combine taking a look at market fundamentals, trying to parse the cryptic messaging that the Fed sometimes has for us, and taking a look at what the market's doing behind what Powell or the Fed is actually saying and doing. And for now, the reaction to the market has been positive. The reaction from the market has been positive in light of this most recent Fed day. But as we've just seen, the market has yet to reclaim that 200-day exponential moving average. Until it does, I'm going to stay neutral to bearish. And if we do, I'm going to shift from neutral to bullish. And the further away to the upside we can move, if we can move away from that 200-day moving average, the more bullish I'm going to become. So this is how I combine fundamental and technical analysis. It's what keeps me on the right side of the market far more often than not. Thanks for watching. Hope you learned something new. Hope you found this helpful. See you guys in the next one. Bye for now.